Software giant Adobe will pay $20 billion to buy Figma, a web-based collaborative design platform, in a deal worth about $20 billion. It would be Adobe's biggest ever acquisition. The $20 billion price tag is about half cash and half stock. Adobe expects the deal to close in 2023, subject to the regulatory approvals and the approval of Figma's stockholders. Founded in 2012, Figma provides a collaboration system for developers of interactive mobile and web applications. Adobe's greatness has been rooted in our ability to create new categories and deliver cutting-edge technologies through organic innovation and inorganic acquisitions, Adobe Chairman and CEO Shantanu Narayen said in announcing the deal. The combination of Adobe and Figma is transformational and will accelerate our vision for collaborative creativity. Also Thursday, Adobe reported record revenue of $4.43 billion, up 13% year-over-year, and net income of $1.14 billion for its third quarter of fiscal year 2022 ended September 2. Adobe said Figma is expected to exit 2022 with more than $400 million in total annual recurring revenue, ARR. Figma has gross margins of about 90% and generates positive operating cash flows, according to the company. Adobe is deeply committed to keeping Figma operating autonomously, Dylan Field, Figma's co-founder and CEO, wrote in a blog post about the deal. Field said he will continue as CEO, reporting to David Wadhwani, president of Adobe's digital media business. As part of Adobe, Figma will have the opportunity to incorporate their expertise in imaging, photography, illustration, video, 3D and font technology to the Figma platform, Field wrote. Additionally, we will have the opportunity to reimagine what the best creative tools could look like within the Figma technology stack. The Figma deal is Adobe's biggest M&A play in its 40-year history. In 2021, Adobe paid $1.275 billion for Frame.io, a cloud-based video collaboration platform with more than 1 million users across media and entertainment companies, agencies and brands. San Jose-based Adobe is best known for its design and video software such as Photoshop, Premiere Pro, Illustrator and Acrobat. The company also sells analytics, marketing and publishing products and services. Adobe Chief Executive Officer Shantanu Narayen hailed Figma's business as the future of work, and said there were tremendous opportunities in combining it with his company's offerings, such as document reader Acrobat and online whiteboard FigJam. The $20 billion exit marked a major win for Figma's venture capital backers, including Index Ventures, Greylock Partners and Kleiner Perkins. This partnership will give Figma users access to Adobe's photography, illustration, and video technology, all in one place. And Figma in return can offer its deep expertise in building in the browser, said Josh Coyne, partner at Kleiner Perkins, who first invested in Figma in 2018. An investment expected to deliver over 100 times in return once the deal closes. Adobe investors were less impressed, driving down the company's stock by 17% on Thursday. Many of them said they understood the rationale around the strategy, but argued Adobe overpaid for a company that was valued at about $10 billion in a private fundraising round a little over a year ago. David Wagner, portfolio manager and equity analyst at Aptus Capital Advisors, which owns a 1.5% stake in Adobe, said Figma's annual recurring revenue, ARR, was $400 million, a tiny fraction of Adobe's $14 billion, making it unreasonable for Adobe to pay the equivalent of 11% of its market value for 2.8% more arranged by. "We're disappointed with the price paid for the company," Figma, said Wagner. Adobe said it expected the deal to be accretive to its earnings 3 years after its completion. It added that Figma's total addressable market would reach $16.5 billion by 2025 across design, whiteboarding and collaboration. Adobe is one of the most acquisitive companies in the Silicon Valley and has bought numerous businesses over the years, as it has looked to defend market share against competitors. Prior to Figma, its largest acquisition was that of software maker Marketo for $4.75 billion in 2018. It has also bought other companies over the past 24 months to sharpen its focus on collaboration tools, including those of video collaboration software Frame.io, social media marketing startup Content Cal and collaboration toolmaker Workfront. The deal is expected to close in 2023, subject to regulatory approvals. San Francisco-based Figma will continue to be led by co-founder and chief executive officer Dylan Field and operate independently. Either company will have to pay a termination fee of $1 billion if they scrap the deal. Meanwhile, Adobe's fourth quarter revenue forecast of $4.52 billion came in below the $4.58 billion estimated by analysts, according to Refinitiv data. The company's third quarter profit fell nearly 6%, reflecting the hit from a stronger US dollar and higher costs.